So it gives me great honor and pleasure to invite our next guest, Faith Klimchak, all the way from Las Vegas, Nevada in the US. And Faith has been a professional poker player for the last 8 years. No surprises being from Las Vegas, right? And sadly, because of the COVID-19 pandemic, casinos have closed down. So Faith is now a full-time trader. In fact, she recently incorporated a company trading via her company. So Faith, thank you so much for being with us today.
Thank you, Adam.
And Faith has been doing pretty well, right? Getting pretty consistent returns in her investments and trading as well. And she's also been a very active member in our trading chat group. In fact, sharing her ideas and encouraging new students, as well as posting trade setups now and now again. So really happy to have you, Faith.
Thank you.
So Faith, maybe you can start by sharing a bit about your background in the markets. How long have you been involved in the markets, and in what way?
Okay. So I was a investor for a very long time, over 20 years. Anytime I had a little bit of extra money saved, I would invest, just buy and hold companies I knew. So I always held shares of Disney, McDonald's. I was not actively investing. I was just saving through long-term investments.
So just doing dollar cost averaging.
Dollar cost averaging, yeah. And it wasn't even consistent. It was, if I had a good bonus at work, or playing poker, if I won a tournament, take 10 or 20,000 and put it away instead of a savings account. The markets were my savings account.
Okay.
In 2018, I'm sorry, go ahead.
And did you do any kind of trading, any kind of short-term day trading or swing trading?
No trading at all.
Okay. So for you, trading was in a casino, right? That's your way to create short-term cash flow, and the stock market was your bank.
Correct. The stock market was my 401k, my long-term savings. So in 2018, I became very focused on putting together a definitive retirement plan. My goal was always to try to retire by 50 years old. And as that age was approaching, I sat down with my broker, as well as started doing some research through Morningstar and other internet resources to see if my portfolio was allocated properly for me to be able to live off of it for the next 30, 40 years. I was very disappointed in my broker, when my financial advisor, when I asked him for advice regarding reallocation or anything along those lines. His only answer was, many people have retired with less money than you. That's all he said. So I began my personal journey into self-managing my portfolio. Came across your videos and signed up for first the Value Momentum Investing course.
And that was back in 2018 or 2019? 2018, okay. 2018.
Yeah, right around 2 years ago. So I took about 6 months to reallocate my portfolio and learn about evaluating great companies. And after that time, and I felt good about where I had moved my money from and to, I then became interested in trading. So at that time, I purchased both the trading course as well as the options course, and studied the trading courses first, because I really felt that I needed to have a good understanding of technical indicators and reading charts before I could ever be successful going to the next step. So I began trading and joined the trading Telegram group. Traded probably almost 8 months before I started tipping my toe into options. Was mostly trading the bounce strategy and trend retracement. And then you introduced MVR, which was successful for me. But I immediately, as I started reading about options, realized how my returns could be magnified through finding trading setups, but actually trading them through options instead of trading shares.
Yep.
And my life changed forever.
That's great. So before you took the courses, what returns were you getting for the last 20 years buying, like you said, Disney and McDonald's and just holding them in the long run?
I mean, I would just say average returns. I never paid attention to it. It was, dividend reinvestment and whatever the stock was doing was doing. So I would say
Probably
whatever
8 to 10% a year. That
on a good year, maybe. Yeah.
Okay. So I'm just curious, when you took that value momentum investing course, the first course that you took,
Yes.
what did you learn that you found useful that was different from what you were doing prior to that?
I learned how to find and evaluate a great company. So, for example, we both know that Amazon is a great company.
Yeah.
But if I saw Amazon trading at 3,000 or at 1,200, I didn't know the difference between if that was a good price to buy it. I was a typical investor that saw anything over $500 a share was expensive. I didn't know what expensive meant, and now I know what expensive means.
All right. So one of the most important things was valuation, knowing how to value a stock, right? That a $2,000 stock could be cheap and a $50 stock could be expensive,
correct,
depending on how you compare it to the intrinsic value.
For sure. And I had no idea.
Okay. So once you learned that, how did you reallocate your portfolio differently? Did you buy different stocks? Did you kick out some old stocks?
Yes.
Yeah. What action did you take? Yeah.
I kicked out IBM. Eventually I kicked out Coca-Cola just because I got tired of it and just found better stock to replace it with.
Yeah.
But the biggest difference for me, the biggest part of my reallocation didn't happen until COVID. COVID gave me an opportunity. Let me step back. When I started getting fearful about a potential crash, and I had been paying attention to Wuhan and to the international scene before COVID hit the United States, I purchased protective puts on my long-term portfolio. And that was something I learned from you. And I want to thank you for that because it made all the difference in the world. By the second week of March, my entire portfolio was nearly liquid in cash. And by the first week of April, I was buying into stocks that I had never held before because they were at good levels. So I purchased Google, I purchased Microsoft. I had already had Facebook because I was very lucky to get in on the original IPO, but I bought back into Facebook. But the bottom line was I locked up all my gains, and I really felt that we were dealing with a downturn like we had never seen before. I mean, I had traded through December 2018, which was a bear market, but it was nothing like what we saw in 2020. So I have you to thank for that.
So did you expect the rebound as fast as it was?
No, I watched your video on YouTube.
Okay, but I did say that it was a great time to buy. I did say don't sell, right? Don't sell.
You did say
don't rebound. Although I didn't expect it to rebound that fast myself, but I said that, you know what, it's a great opportunity back in early April.
April.
Yeah. Did you take advantage of that?
Yeah, if you look at most of my holdings now, Amazon, Google, Qualcomm, all of those stocks were purchased the first week of April.
Great. Okay, yeah. So you mentioned that you started trading options in the last couple of months?
No, I started trading options in 2019. When the COVID crash happened, what I did prior was I took originally about 5% of my portfolio allocated to trading. Then as I got better, I allocated more, and I wanted to be able to qualify for portfolio margin through TD.
Yep.
So I opened a separate account just for trading, and I did all of my trading using portfolio margin. So that was about 10% of my overall portfolio I'm using for trading still.
Okay.
And that's now the company account.
Great.
Definitely when COVID happened, I had pretty significant down draws on my trading. But then as they hit stop losses, I just stopped out, and then that was it. I just stopped. I put a few bearish trades on, but nothing significant. I didn't have any big hedges in place. I purchased a couple inverse ETFs.
Yeah.
But at the time, I was not trading the VIX. So my only hedges were buying protective puts and buying some inverse ETFs. And that was about it. Just fasten your seatbelt and and hold on tight.
Okay. So what are your go-to strategies right now that you find is giving you the most consistent returns, and you're now focusing on that to replace your income from poker?
So predominantly, I am selling premium week after week, month after month. So cash secured puts, put credit spreads, bullish credit spreads.
Yeah.
Whether they be a little bit, tighter, a little bit higher deltas, or the more extreme one, the more conservative. A mix of both, probably. The majority of my trades are collecting premium, and I also trade a lot of strangles, which I know you don't teach in your course, but that's a strategy that I use a lot for neutral trades. I just sell them and then just wait for the time to pass, for the IV to pass, and then exit all my trades at 50% profit.
Okay, great. And what kind of returns have you been getting since you started using all these strategies?
So year to date, I'm probably between 30-35% for this year.
That's great.
Yeah, it's considering how bad the beginning of the year was, it's been really good. It's probably even higher after last week, but I don't count until the end of the month.
Sure. I mean, the S&P 500, I think it's up like 8%. So you've beaten the S&P,
Definitely beating the S&P.
Yeah, three times, right? 4 times.
Minimizing risk, which is important. I think the biggest thing for me the last 6 months, since COVID, since I've stopped playing poker and I've really had time to focus and study, is coming up with a trading plan. And a trading plan is not just the plan for one trade, where you're going to enter, where you're going to exit, how you're going to manage that trade. But the overall trading plan is, how much returns do I want to make this month? Okay, to achieve that, how many trades do I have to take? How much profit do I have to take? Assuming an 80% win rate, and you do the math backwards. So if you want to make 5,000 a month, you better have collected at least 12,000 in premium, so that you can, go back and close those trades out and stick to the plan. I think that's the biggest thing. I do receive a lot of messages in Telegram from new traders reaching out, and I'm happy to answer questions if I can. But a lot of times when they're asking me about a specific trade, I'll ask them, what was your plan for this trade? They always want to know, should I get out? What should I do? So what was your plan?
Yeah.
Well, and their plan was, I hope it goes up. I said, well, hope is not a strategy. Hope is not a trading plan. So the minute you enter that trade, you have to have your maximum loss. You have to understand the dynamics of the trade. Do you need the price to move? Do you need the implied volatility to drop? You have to understand for the strategy that you're using. And a lot of new traders just don't. They see something and they jump in because they're excited, and then they don't know when to take profit, or they don't know when to get out. And it's really important to do that.
Yeah. Because, a lot of newbies, they think that to do well in trading is about luck. It's about predicting the future. And as well as I do, that it's got nothing to do with luck, at least not in the long run. Short term, sometimes we're lucky, sometimes we're not. But the good luck and bad luck, they tend to even off over time, right? That over time, to make money is about having an edge in the markets. And a lot of people don't understand that. And what's great is the fact that you come from a background of professional poker playing. And I've met a lot of professional poker players myself. And again, a lot of people have this misconception that, professional poker players or blackjack players are gamblers. They depend on luck, and that's totally not true, right? In fact, I find that professional poker players are the best at probabilities. They're the best at math. They understand the edge. And I think your background has really served you well in the markets as well. Would you say that?
Oh, absolutely. Absolutely. And I think the biggest thing too is the discipline of taking profits. Yeah. I mean, everybody dreams of, the 100-bagger stock that's going to go to the moon. For me, I'm happy to achieve a profit goal. And once I exit a trade, if I have any different marks on the charts, I erase them. So
Mm.
that if I go back and look at that trade in 2 weeks, I don't even remember where I got out because I don't want to know what happened after I got out. I took my money, I get out. Hit and run, hit and run.
So, through playing poker, did you learn how to manage your psychology really well, manage your emotions?
Oh,
And
sure. Yes. Yes.
how long did it take for you to go through that journey of being able to, again, trade and play like a robot, statistically? No emotions,
Statistically,
right?
you have to play like a robot, but you also have to deal with the human element. So sometimes people can be jerks. And many times, especially when you're beating people, you're taking their money, they don't tend to be very nice to you.
Yeah.
So you have to become psychologically numb to getting called some pretty nasty things sometimes.
Yeah.
But by the same token, you also have to deal with losses. And you have to train yourself that as long as you put your chips in the middle with the advantage, you can't control how the cards rule out. You got your money in good, and it doesn't always work. So you have to sometimes think of your bankroll as chips, not money, so that it doesn't hurt so bad when you see it getting pushed across the other side of the table. But you just, take your losses, because you're not going to win every hand of poker. You're not going to win every trade in the markets. Try to learn from it and move on. And if you did everything properly, then you just got unlucky. But you have to keep trading. And I know a lot of people get frustrated and they're ready to give up. And I just tell everybody, especially new to trading, especially since COVID, everybody has decided they're going to become a trader, right? So take it slow, learn one strategy at a time. Not every strategy is going to suit your personal comfort level and your risk level. It's okay to be conservative. It's okay to trade small. It's okay to paper trade for a year until you feel like you're an expert. There's nothing wrong with that.
Yeah. Did you start with paper trading, or did you jump in live immediately?
I jumped in live, but I was trading pretty small to begin with. But I mean, I just learn from your mistakes. I've done everything that I can possibly do to become better at trading a back ratio spread, for example, on options.
Yeah.
I can't do it well. It's just not my thing. I'm not good at it. I don't make money at it. So I took it out of my arsenal and just move on to another strategy.
Yeah. Trade what suits your personality, right?
Yeah, you trade what suits your personality.
Would you consider yourself conservative, aggressive, or moderate?
I think moderate. I think moderate.
And what percentage risk do you put on per trade?
So I risk 3,000 per trade. And I have generally anywhere from 15 to 20 trades open at any given time.
Well, that's a lot. That's a lot.
But I try to spread them out. So I use a lot of weekly options on really liquid stocks so that every week I have cash secured puts coming up for expiration so that I have a constant, money coming in every week.
Yeah.
And then I do the same thing with my strangles and with my credit spreads. I try to open 45 days before expiration, but you can't just do it like a robot. Like, for example, last week, Monday would have been 45 days to enter the December expirations.
Yeah.
I didn't do it because it was 2 days before the election.
Yeah.
And I didn't enter Tuesday. And then Wednesday was a big green day. Well, I want to do spreads on a red day. So I had to wait all the way to Friday. Yeah, you just have to be flexible.
Yeah, so never force a trade. That's why I tell you, never force a trade, right?
No, someone was asking. The girl comes to you.
yeah. Someone was asking on the chat group, "Am I going to take trades today?" And I said, probably not, because today looks like futures are up. It's a green day, and we never want to enter long on the green day. You want to enter long on a bearish on a red day, right? And to do that, you have to go against your normal emotions. Yep. And knowing when not to trade is as important as knowing when to trade, right?
Sometimes the best trades are the ones you never took.
Yep, absolutely. And what's your routine like? How many hours do you have to spend on research, on watching the markets?
So I generally spend, I would say, the 30 minutes before the open. I usually trade the first hour, 2 hours of the day. and then the last hour, 2 hours of the day.
Okay.
And then the middle of the day, you know, I'll do research or I'm in the chat groups. Sometimes I don't trade the end of the day. I try to go play golf, but now winter's coming. So it just kind of depends.
Okay.
But I'll also tell people who work a full-time job who are interested in learning options, if you're going to be trading complex strategies, you've got to be able to check on them during market hours. And here in the States, at least, a lot of people who work 9 to 5, you know, they go to work and they can't be watching the markets. And if you're going to be trading Snipex or something that's a little more volatile, you've got to find a way to do that, or else those trades can sneak up on you pretty quick.
Yep. So there are different strategies for everyone. So there are certain strategies like credit spreads. You don't have to micromanage it that much.
No.
Yeah. In fact, I trade mainly credit spreads, and I only look at the market probably an hour after it opens, an hour and a half tops. That's it. And watching the market after that could be counterproductive sometimes because you get emotional and you do stupid things. You start to intervene in your trades.
Sure, it can.
Yeah. Okay. So one of the last questions, Faith, would be, what would you say to someone who wants to trade, wants to invest, but they are hesitant taking courses because they may say, I don't have the time. I don't want to spend money on courses when I can learn it for free on the internet, or trial and error, or it's risky. You know, what advice would you give to a newbie?
It is absolutely the best money you will ever spend. That the course will pay for itself after your first few trades. But take the time to study, because the courses are very intensive and you have to go chapter by chapter. And even once you finish them, you'll never be finished because you will always go back. And as you become more experienced, you will need to reference back to the courses several times, whether it's stock trading or options or even long-term investing, because there's too much. You'll never remember all.
Yeah. You can't just watch it once, right?
No.
And that's the reason why we give our students a lifetime access to all the videos, and we update the videos as regularly as we can, because we know that you got to keep watching it again and again. You got to watch it 10 times, 20 times over the years, in fact.
Yeah.
Right. Okay, Faith, thank you so much for being with us. And thank you also so much for, being so active in the Telegram community. Really makes a difference. Like you said, you get whatever you put into it. And I think because you put in so much in terms of your hard work, your research, as well as putting into the community, and that's why you're getting great returns for yourself.
Thank you, Adam. You changed my life.
Thank you very much. Thank you very much. It was my pleasure. Right. Take care. Bye-bye.
Bye.
If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.